Welcome back. You're watching Business Morning on Channels Television. So we're taking a look at commodities market for today, we're reviewing the markets for today with Opeyemi Oguntade, who is a senior investment analyst with Financial Derivatives Company. Of course, it's great to have you on the program. Opeyemi, good morning, and thank you so much for coming in.
Good morning. Thank you for having me.
So from the last conversation I had with Ada, at least that was just about 48 hours ago, thereabouts. We took a look at the developments with regards to the price of cement, which has increased about almost 40%, 37.5%, according to your research. But since that day, we've heard stories about cement makers going on strike, a 5-day strike actually, to protest the increase in the price of cement. You know, I'm not trying to sound insensitive, but does anybody really care if cement prices actually goes up? I mean, most people at this time are not really thinking about building houses anyway because there really isn't any sufficient cash.
Yes, like you rightly mentioned, most people aren't bothered about building houses now because even if cement is just one component that you use in building, there are other components that are imported as well and are affected by the forex. So at this point in time, most economic agents are not really thinking about building houses. But if you're looking at the government has been involved in a lot of construction projects lately. So if there's anybody that is going to be affected by this increase in the cement prices, it's going to be the government. And it's also very surprising that cement prices are going up at this point when there's a lot of rain, because usually whenever there's a lot of rain, there's lower construction because you don't want to be, you don't want to be building while there's rain falling and it's disrupting activities in that sector. So 5 days strike on cement, I'm not really sure if that's going to reverse what is happening, because at the end of the day, most of the cement makers are in the industry to make profit. They're not, they're not a charity, so they have to make sure that the prices that they're charging for their products are cost reflective. And so I really don't think the strike is going to, reverse the price.
But you see, most people will care if the price of flour, for instance, goes up, because already we're buying bread at, for some, depending on the size of the loaf you're going to consume anyway, 300 upwards. For those that were selling for 259 is at 300. And, well, your guess is as good as mine. A lot of people are cutting back on eating bread.
Well, yes. Well, I wouldn't say cutting back. Maybe reducing the quantity, because at the end of the day, bread is one of those staples that you really can't, go a week or even a day without eating it. It's just like rice. You eat bread, you eat rice, you eat all other sorts of commodities. And I think at this point, if we're looking at the consumer's budget, so to speak, even if we're saying that their purchasing power is declining as time goes by, what we would see with consumers is they will try to cut down on expenditures that aren't necessary for maybe luxurious expenditures or things that have to do with luxury, so to speak, and to focus more on things that are more of necessities like food, like housing, and all that.
But have you gotten a sense, from your analysis and from your survey, do you think that most consumers now are spending based on necessities or based on wants?
Well, most likely, based on research, they're spending based on, the NOI polls that came up last month showed that we've seen that consumers are shifting away from wants more towards necessities, because you can't really afford to, to satisfy all your wants. Even without the lower purchasing power, you couldn't really satisfy all your wants. Now, with the lower purchasing power, there's no time to, be looking towards your desires. Right now, you'll be focusing more, or consumers are focusing more on what is necessary as opposed to what they want or what they desire.
But then you see, we're going into a very long holiday starting from tomorrow, and we know that there's going to be a lot of heavy spending, whether you like it or not. But how do you think spending should be? Should it be, I'll still ask again, should it be a case of what I want or what I need, based on the fact that we're in a situation where you really can't say how or where the economy is going to tilt? At the moment, we know that we're actually in a recession. So everybody is still watching and waiting to see what will happen, if there'll be any liquidity of any form coming into the market, and if you're going to be liquid in any way. So for this holiday, how do you think it's going to be? Is it going to be a muted kind of celebration? Will everybody be calculating inflation and GDP numbers as they spend money?
Well, at the end of the day, it's a holiday, like you mentioned. It's more like, I'll call it more like a festive season, if anything, if that's anything to go by. So, and by knowledge and by studying Nigerians are not one to, mute up celebrations, even if, the accounts aren't really, in the green, on the green side. If you even look at Nigerians on an average, some Nigerians even borrow to have weddings. So at the end of the day, it's a celebration, and I don't think we're going to see any kind of muted celebrations on that side, because we are Nigerians and we love to celebrate.
So talk to us about how this holiday, if it has any effect on, of course, the price of some of the commodities that we track here on the program. That's the agri-commodities, for instance, rice, tomatoes, beans, oil.
So far so good. What we've seen in the market is, last week Tuesday, when Ada came on the show, there was an increase in some of the prices of the commodities like rice, beans, and so on and so forth. But between Tuesday and Thursday, that's the day, we've seen prices have remained flat. But even if you're looking at the table that on the table that shows the commodity prices, and you would notice that the only commodity on that table, which is tomatoes, that is not at its 1-year high, is tomatoes, and that's because we had an anomaly sometime during April towards June, where we had two absolutes, and we saw the price of a basket of tomatoes going up to 45,000 naira. But even at the current price of 8,000 naira, if we didn't have that anomaly, as at this time last year, tomato was going for 4,000 naira for a basket. So if we didn't have that anomaly, tomatoes would actually be at a 1-year high as well. So what we're seeing in the commodities markets is prices are already high. I don't really think this festive season is going to, lead to another multiplier effect on that side. We've already seen it going as high as possible.
One of the stories we're tracking on Business Morning is, and of course on Channels Television as a whole, is the increase, there's rumors of an increase in the pump price of petrol. Now, there was a meeting, an emergency meeting in Abuja yesterday. We'll get to that in just a bit. But talk to us about how much of an effect, because I know, I spoke to you just before I came into the studios, and you remarked about the fact how some fueling stations are actually closed, and you're seeing queues building up. Do you think, or how much of an effect do you think is going to also have on the price of commodities that will be sold at this time? So you're dealing with the issue of having people come into the market, and then you're also dealing with the issue of not having petrol to even get to the market in the first place, or even take your goods and services out.
Okay, so for the petrol, when we're looking at the energy market, first of all, the price at which the pump price was benchmarked was 285 naira to $1, and what we're seeing in the market right now is 215 naira to $1. And most marketers are complaining that they would like to, adopt a cost-reflective price for the pump price of petrol. And at the end of the day, if we're looking at what's going on today, yesterday there were a couple of queues like you mentioned, and this morning as well. And we need to remember that when we're dealing with transportation costs for commodities, it's actually diesel and not petrol. And the diesel market is already deregulated anyway, so it's not a market that is necessarily affected by fuel shortages, so to speak, because the market is deregulated and the marketers are already charging according to what is going on, and charging market reflective prices or cost reflective prices. So I don't think the fact that we are expecting an imminent fuel shortages is going to have a significant impact on the commodities market, because what we're dealing with is diesel, and diesel as at today was about 200 naira to $1. So yes. And then we're also still dealing with 200 naira for a litre. We're still also dealing with the issue of FX volatility. I'm going to be talking about that much later with Robert Omotunde, who's acting, head of research at AfriInvest. But just quickly give us, an idea. Most of the FMCG companies are beginning to talk about increasing the prices of some of the commodities as well. Yes, definitely. FMCGs, at the end of the day, they're in business to make profit. And so far, so good. We've seen this year that they've actually adopted a relatively stable price, because they don't want to, have volatility in shelf prices. But looking at what has happened, when the CBN introduced the floating exchange rate, they assumed that, okay, with the floating exchange rates, there'll be more dollar availability in the market, or dollar liquidity. But that hasn't improved for them so far, and they believe that, if there's no improvement, then what they have to do is make sure that they are charging prices that are cost reflective. And in the report that was sent out by Renaissance Capital, based on their survey, they expect FMCGs to increase prices between 10 to 20%. If we look at the naira depreciation in the markets between June and between June and September is within that bound of 10 to 20%. So which shows you that they're actually trying to increase prices to make sure that this cost reflects are not taking advantage of, the economic situation. They're not in business to make losses. They're in business to make profits. So if there is no improvement in FX availability, then we'll certainly see an increase in consumer good prices.
Okoyemi, we're going to be resuming this conversation after the very long holiday.
Yes.
Do you expect any muted movements, so to speak, whether for consumers or retailers or wholesalers?
After the holiday, I think the market would probably still maintain the same level it is right now. I don't think we'll see any dramatic jump in the prices of commodities.
All right, Okoyemi, thank you so much for coming on the program.
Thank you for joining me.